No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. Been a lot of excitement, and it's not good excitement in the markets this past week. We probably the fastest we've gone, I think it was, in fact, historically the fastest we've ever gone into correction. In other words, a 10% drop in the market. One of the things to look at, we've been actually overdue for this correction. It's been talked about for some time now that we've been expecting, in fact, at least a 10% correction. And through that, that's usually kind of the sorting some things out in the market, and then we find a bottom on it and a foundation to work off of. Now, these are the concerns, not the correction itself, which are, we see these cyclically in the market over time, all the time. But what we do have a concern about, of course, is this coronavirus thing. This seems to be triggering it. What are the long-term impacts? And this is the most important thing. When you're investing in the stock market is not a casino that you walk in on vacation, throw down some bets, and then leave again, okay? The market is a place where you're investing for the long term. And understanding you want to have good companies that you're investing in. It's not a speculative venture. If you have some hobby dollars and you want to, put it in the market and play around and try to find the next Apple or Microsoft or something, have at it. Just make sure that, just like money you spend when you go to a casino or on vacation, that it's money you're not going to need. It's money that's not going to change your lifestyle if you lose it. Then think of your nest egg, the money that you are going to depend on to drive your retirement income in retirement. That's the money you want to have invested properly. Now, if you have a real aversion to the stock market for whatever reason and you want to play it safer, there are safe alternatives to that. Use them all the time. I talk about them on air. We talk about some safe money things like bonds, of course, fixed annuities, fixed index annuities, but you have to be very careful with these as well. You can say, oh, I'm going to get some bonds, and this high yield bond fund, as an example, gives me a better return, so that's probably a good one. I'll do that. And unfortunately, those are junk bonds in there. Those are very high risk. All right, they're paying a higher interest rate because the borrowers, right, the corporations, the government entities, have poor credit histories, right? The higher likelihood of default. So therefore, they have to pay higher interest to borrow money, just like anybody with a bad credit record or bad credit score would have to do. It works the same with businesses. So you want to avoid those, all right? The other thing is fixed annuities. You want to make sure that there are no gotchas in that type of annuity. So if it's a fixed annuity, it's going to be like a CD. It's going to pay you right now, I think, around 2.5% for a 2-year fixed annuity, for example. And that's the way it should work. You put your money in, you keep it there for 2 years, you get 2.5% per year. At the end of the 2 years, they're going to offer you a renewal rate. If you don't like it, you take your money and you do something else with it. If you like it, you do in maybe another 2 years. Just like CDs. You pick a term, you're going to get a certain rate. Right now, longer terms, which would normally pay you a higher rate, do not. So therefore, and interest rates are very low, likely to go up over the next, say, 3 to 5 years. So you don't want to get locked into something for 5 years on a fixed annuity, guaranteeing you maybe 3% as an example, when in 2 years you might be able to get that in a shorter term, or you might even be able to get in 3 years or more, you might be able to get 4% or greater. So watch those kinds of things. The next thing on fixed index annuities, you got to be very careful with those. Some of them have high fees. Some of them have low participation rates. They have caps that say you can't earn a certain amount. So you want to get rid of all those. Those aren't ones you want to invest in. You want uncapped, high participation rates, low fee, or in some instances even zero fees can be found. That's the kind of product that you would be looking for. If you need some help with that, give my office a call. We can help you with those, and we'll give you some opportunity to do that. But the number 615-376-5325. If you call the office just with questions, or if you want to email me, hank@hankparrott.com, we can help you. If you've got some concerns about the market right now and you're trying to figure out what to do, we can help you with that as well. One of the things when it comes to investing in the market, make sure my clients don't have to worry in this situation. They know they've got thousands of companies in their portfolios. They know that they're designed for times like this. Over the last 2 bear markets, back in 2000 through 2002 and in 2008, they held up either break even compared to a 50% loss or half the loss of what the market did. So they know they're positioned well to protect themselves, and the portfolios recover over the last 2 bear markets, recovered in half the time that the S&P did. So again, it's how you're invested, making sure. Here, principles I talk about all the time of modern portfolio theory, and understanding that when it comes to investing, if you're applying these proven principles, safe proven principles for investing in the stock market, it's going to help you weather times like this much better. All right. So again, there it is, 615-376-5325. We'll get that out there again as far as for the free comprehensive planning as well. And I can get you also copies of my book, 7 Steps to Financial Freedom in Retirement. Chapter 5 talks about how the smart money invests in the market. And this is a time to be smart with your money in the market. When you see these kind of drops, you want to be well positioned. So if you're concerned, or if you haven't, if you want to get a second opinion, or if you just want to, maybe this is a good time to have a review of your portfolio, give my office a call and we'll help you with that. But here's the other piece. It is a good time to take a look. If you're seeing drops as much, if your portfolio dropped also 10% or more, then it probably means you got a lot of risk there that you could get, that you can stay, you want to stay invested, but that doesn't mean you have to be invested in things that are going to drop that much. There are other ways to invest and take advantage of the market, getting the market returns without as much risk. All right. One of the things I want you to understand too that's real important, as you can see, I got Dr. Friday with me here today. We're going to get into some tax stuff. It's that time of year, but I wanted to address this stuff with the market since we've had such a bad week. And I've had calls, not too many. Again, my clients are pretty, comfortable with their investments because we've gone over that. We review it. We set the proper expectations of what's going to happen in these kind of market times. And they're weathering these very well. They're not taking the hits that the market, not dropping near as much as the market is, for one thing. The other is that in their planning, we also make sure that our plans that we do with with clients is we're setting them up to where they're not going to have to worry. It's not going to interrupt their income streams that they're taking from their accounts. It's going to maintain the stability of income that they need to be able to maintain their standard of living, quality of life, even in times like this, and never have to worry about running out of money. We have the defensive strategies built into the plans. We review on a regular basis every year just to make sure that we're staying on course and reviewing the plan, so they make sure. I want to make sure, just like we talked about here, the goal of this is so you understand, right, how these things work, and you position yourself properly, right, that you know the rules so that you're not paying too much in taxes, an example, or you're not taking more risk in the market than you need to get a market return. That's where these principles of the modern portfolio principles that I talk about all the time are about. Now, one thing I want to leave you with is this on this part, and then we'll get into the tax stuff. Understanding too that this correction has been overdue. It's nothing to worry about. We've been through this, and bear markets for that matter. Remember in the financial crisis how things were. Remember with 9/11. We've had horrendous events over time that have tested markets. Bear markets are normal with that. 40–50% and more drops. You would just want to make sure you stay disciplined. The tendency, the danger is that you try to sit it out. You say, oh, I'm going to get out of the market, I'm scared. And then I'm going to wait until things sort out. Well, the problem is by the time it sorts out, you've missed out on tremendous opportunity. And let me leave you with a statistic on this. Market timing does not work, okay? There's a lot of studies on this. If you miss just the 10 best days out of the last 10 years, think of that, 10 days out of 10 years, over 3,000 trading days, and you miss just the 10 best, and your returns will be half what they would have been if you just stayed invested. So remember, be a long-term investor, know what your goals are, know what the game is about taking care of you throughout your lifetime. And then this is a good time, though, to review and make sure you're properly invested. Okay. We're going to take a break. When we come back, we're going to talk a little bit about some taxes, tax planning opportunities that are out there, both how to get ready to wrap up for 19 and file for your taxes, as well as some tips for 2020, how to prepare for this year to help minimize your taxes even more. First, a break. Join us here. We'll be right back on the Retirement Report.